back. Previously we were discussing about the accounting standards that are following in our country. There are two sets of standards: accounting standards of India and IND AS, and commonly they are known as IND AS, otherwise known as Indian Accounting Standards. And we have discussed in brief each of these standards that are applicable in our country until now. So let us discuss the further theoretical aspects in the same module. Next area: Financial Accounting Standard Board, otherwise known as FASB. It was established in 1973. The FASB, otherwise known as Financial Accounting Standards Board, is an independent and a private sector non-profit organization based in United States. They establishes financial accounting and reporting standards for public and private companies and not-for-profit organization that follows generally accepted accounting principles in the United States. So actually it is a regulatory body based in America. Just like the Accounting Standards Board of our country and International Accounting Standards Board of international level, FASB also a regulatory authority in United States. FASB is recognized by the Securities and Exchange Commission in the United States of America as the designated accounting standard setter for the public companies. So not only a regulator but also the standard setter of the America. FASB standards are recognized as authoritative by many other organizations, including state boards of accounting and the American Institute of CPAs. So it's a private sector, independently owned regulatory authority in the field of accounting based in America. That is the main concept with regard to FASB. The Financial Accounting Foundation, otherwise known as FAF. Usually these in every country there will be a similar type of foundations. Usually foundations provide financial assistance for accounting standards boards or financial accounting standards board. So it is a fund provider. So FAF, otherwise known as Financial Accounting Foundation of America, it was also established in 1972. It supports and oversees the working of FASB. The Financial Accounting Foundation is the independent private sector not-for-profit organization that also based in Norway in United States of America. They are responsible for the oversight and administration, financing and appointment of the officials in FASB, and not only in FASB but also in the Governmental Accounting Standards Board, otherwise known as GASB. So all these aspects are relating to the American frontage. Just like the Indian Accounting Standards or Accounting Standards Board in our country, the Accounting Standards Board of the America also has relevance. So next one, FASB mission. Mission means what is the objective of this FASB, why it is being set up in that country. The collective mission of the FASB and the GASB, FASB and GASB, and the FAF is to establish and improve the financial accounting and reporting standards to provide useful information to investors and other users of financial reports and educate the stakeholders or users on how to most effectively understand and implement those standards. So that is the main objective of FASB, not only FASB, GASB as well as FAF. So the roles played by FASB, GASB and FAF are: The FASB, otherwise known as Financial Accounting Standards Board, and GASB means Governmental Accounting Standards Board, are charged with setting the high quality standards through a process that is comprehensive and inclusive. So their main activity is to set standards, whereas the FAF or Financial Accounting Foundation management is responsible for providing strategic counsel and services that support the work of the standard setting boards. Standard setting boards means FASB and GASB. And finally, FAF's trustees are responsible for providing oversight and promoting an independent and effective standard setting process. So all these three boards or individual agencies has its own objectives, and the ultimate objective of all these bodies to set high quality standards and maintain uniformity in the presentation of their financial statement. Just like the INDA standards and the Indian Accounting Standards Boards, like that, FASB, FAF and GASB also played their role from the American point of view. Next one, role of FASB in developing US GAAP. Actually, not only GAAP, it's US GAAP. US GAAP means United States Generally Accepted Accounting Principle. In our country also we are following GAAP. GAAP means Generally Accepted Accounting Principle. That is the universal rules and regulations. So what is the role of FASB in developing American type of GAAP? So in each country there will be, even though the rules and regulation is almost similar, there is some changes depending upon the country of origin or the nature of the economy, like that. Anyway, the FASB has a unique position in the financial reporting process in America. FASB develops and issues financial accounting standards through a transparent and inclusive process intended to promote financial reporting that provides useful information to investors and others who use such financial reports. So, first one, the role played by FASB. The Financial Accounting Standards Board, otherwise known as FASB, sets accounting rules for public companies and private companies, and also for non-profit organizations in United States. We have discussed about that point. That is the one role played by FASB. Next one, in the recent years the FASB has been working with the International Accounting Standards Board, otherwise known as IASB, to establish compatible standards worldwide as a part of uniformity in the accounting practices. It provides leadership for public companies in establishing and improving the accounting method used to prepare financial statements. That is other role of FASB. And finally, the mission of FASB is to establish and improve financial accounting and reporting standards to provide decision useful information to users or investors of financial reports. That is the main aim. So these are the aspects with regard to FASB. Next, let us go to another one. This is other theoretical aspect with regard to FASB. Let us go to the next area. Differences between IFRS and Ind AS. I believe that you all know what is meant by IFRS. What is the meaning of Ind AS? How the Ind AS differ from IFRS? We have discussed about these areas separately and in detail. Anyway, let us pinpoint some of the main differences between IFRS and Ind AS. First basis for differentiating the IFRS and Ind AS is the definition itself. We all know IFRS means International Financial Reporting Standards. It is an internationally recognized accounting standard. And Ind AS means Indian Accounting Standards. Indian Accounting Standard. It is also known as India specific version of IFRS. That is the convergence of Indian Accounting Standards to IFRS. Next basis for differentiation is developed by whom? IFRS is developed by IASB, International Accounting Standards Board. IND AS also, it is developed by ASB, Accounting Standards Board, that is under the control of MCA, that is Ministry of Corporate Affairs. And in case of America, it will be FASB. Yeah, we have discussed about FASB previously. Next one. Who all are following IFRS? That is, in what all countries these IFRS standards are followed. Around the world, around 144 countries are following IFRS. And whereas IND AS is followed only in India. It will be natural because IND AS is specifically based on the Indian perspective. Even though it is converged or it is trying to adapt to the international financial reporting standards. So it is followed only in India. Next one, disclosure basis. The companies complying with IFRS, that is the companies who are presenting their financial statement on the basis of IFRS standards, have to disclose as a separate note that the financial statements are prepared as per IFRS. So the companies who are following the IFRS standards should note down a separate point mentioning that they were following or they are following IFRS standards. Whereas such a disclosure is not mandatory for the companies complying with IND AS or Indian Accounting Standard, because it may be the reason that IND AS are the only standards followed in our country. It is not followed by any other country. So definitely the statements prepared in our country will be as per the IND AS. And moreover, we have learned that there is a certain procedure for certain companies to follow the IND AS. We have studied different phases or classification for companies to whom they have to follow the IND AS compulsorily and to whom they have to follow the accounting standards compulsorily. So naturally, it doesn't need any description regarding they are you preparing or presenting the financial statement as per IND AS, because it is implied that they are following as per the IND AS. Next one, what are the contents of the statement? Anyway, the preparation of financial statement has to be on the basis of some rules and regulations, and IFRS and IND AS are rules and regulations followed in the world means IFRS, and in our Indian perspective it is IND AS. So as per the IFRS, the companies following or complying with IFRS has to prepare financial statement by preparing these four separate statements. One is statement of financial position. It will be much better if you comparing the same aspects with the IND AS, then you will get a clear idea. Statement of financial position, when it compared to IND AS, it is known as balance sheet. We will be using the term balance sheet. Even though statement of financial position is a term we will be using in the theoretical aspect, but usually we will be using the term balance sheet. Statement of financial position is otherwise known as balance sheet. So when it comes to IFRS perspective, it is the statement of profit and loss, whereas in IND AS it is known as profit and loss account. We all know what is meant by profit and loss account. It is a statement, an account which is prepared after the trading account. It is a continuous pattern. Next one, statement of changes in equity for the period. In case of IND AS, it will be statement of changes in equity. There might be slight changes in the heading and numbers, numbers prescribed for each standard, but the computations and the procedures followed under these statements will be almost similar. And here, statement of cash flows for the period, in case of IND AS, it is known as cash flow statement. So the procedure for presenting this statement may be similar with regards to rules and regulations, but then the title given for each of these statements might be different depending upon the standards. And apart from that, we have to follow two other additional items, that is notes to financial statement. That is, apart from preparing the above statement, sometimes you may have to give additional notes with regard to your presentation of financial statement. That means regarding notes with regarding what are the methods you have followed for computing such and such items, for depreciation which method has been used, or what is the details of the contingent liabilities, or what is the details of the contingent assets, such kinds of notes. And finally, disclosure of accounting policies means what are the types of policies which you have followed under the IND AS for presenting the financial statement. So all these 6 comprises of IND AS in presenting the financial statement, whereas these 4 items comprises under IFRS for presenting the financial statements. And the difference is it will be in the Indian perspective or Indian companies, it will be in the world other companies or the international point of view. And finally, balance sheet format. The companies complying with IFRS need to have specific guidelines for preparing balance sheet with assets and liabilities to be classified as current and non-current assets. Usually we have learned about the assets and liabilities into two classifications, that is fixed and current. But in case of IFRS, they will be using, instead of fixed, they will be using non-current and current. And companies following IFRS has to specifically follow the guidelines provided by the IFRS in preparing balance sheet. Whereas companies complying with IND AS need have no such requirement for balance sheet format, but the guidelines are defined for presenting balance sheet. There will be certain procedure rules for presenting the balance sheet, but there are no such guidelines regarding whether you have to follow current and non-current compulsorily or like that. There is no such compliance in the IND AS. When the IFRS is adopted by a concern for the first time, the IFRS will provide clear instruction regarding how it has to be implemented or how it can be followed to present their financial statement. But in case of IND AS, there is no such clear instructions on the first time adoption. Currency in presentation. Usually currency issue, the currency issues come in case of IFRS because IFRS is followed from around 144 countries around the world, and in these 144 countries the currency will not be same. It will be different. The exchange rates will be different, the currency values will be different. So while presenting the financial statement, the currency issue is a major factor while presenting financial statement. So how this currency issue is dealt? When statements are not in functional currency, the key element are to be converted by exchange rates. So while presenting financial statement, the value of the various items or key elements has to be presented in their exchange rates rather than the currency prevailing in that country. In IND AS, definitely there will be no such issue regarding foreign currency because it is a method or a standard set of standards followed in Indian perspective or in Indian economy, and there is no difference regarding currency with regard to the states. There is one single currency followed all over India, so there is no issue regarding the currency. And finally, preparation of consolidated statement is required. Consolidated statement means two or more statements has to be prepared for presenting the financial statement. It is not confined to one single statement. Similarly, in case of IND AS, you have to prepare many statements. It is not confined to any one single statement. So these are the basic differences between IFRS and IND AS from the theoretical point of view. There are many other differences between IFRS and IND AS, but these are the common basis for differentiating IFRS and IND AS. Next, let us go to another important area. Actually, this area is given as an activity to you guys. Find out the main differences between IND AS and IFRS with regards to standards. So you might think that we have discussed about the differences between IND AS and IFRS just now, but that is with regard to their theoretical aspects. From the general point of view, what are the differences we have discussed, but from the standards point of view, in the previous session we have learned by comparing the IFRS standards with the IND AS numericals and their heading along with it, and in almost all the cases we found that the heading followed as per the IND AS and IFRS for a certain number, for example IFRS 1 or IFRS 10, like that. For each of these cases, almost the heading or the title will almost be the same, and contents under each of these standards is almost similar, but there is some differences with regard to some standards of IND AS and IFRS. There will be some differences. So right now I will be giving various set of standards for which there will be considerable differences between IND AS and IFRS with regard to that particular standard. I will give the details of the standards in which there might be difference, but you need to identify what is the difference between the IND AS and IFRS with regard to that particular standard. First one, IND AS 101, first time adoption of Indian accounting standards. So you have to go for what is meant by IND AS 101, what is it specifying, what is the scope and objective of IND AS 101, and at the same time you need to go for the first time adoption of accounting standards in case of IFRS. What are the scope and objectives? So by comparing these two, what is the difference between the scope and objective specified in the first time adoption of Indian accounting standards and the first time adoption of accounting standards in case of IFRS? So identify that. Next one, IND AS 103, business combination. Previously we have learned about all these areas. So what is the difference between the scope and objectives with regard to business combinations in the IFRS? So find out and identify. Next one, IND AS 108, that is with regard to operating segment. So you have to go through the IND AS 108 operating segment. After that you have to go through the operating segment specified as per the IFRS. In IFRS it will be 8. IFRS 8 deals with operating segments. Next one, IND AS 109, that is financial instruments. You have to compare this with international accounting standards, otherwise known as IAS, because we have learned that there are two sets of standards with regard to international point of view: IAS or international accounting standards, that are the standards which have been established until 2001. Any standards that established after 2001 is known as IFRS. So IND AS 109, that is financial instruments, you can see the same standard in the IFRS, not in the IFRS. You will find the same area in IAS 39 or IFRS 9, because there might have been amendments and changes happened in the international standards. So go through that, and it is very easy. Just go and find financial instruments in the IFRS standards or international accounting standards. Next one, IND AS 115, revenue from contracts with customers. And in case of IFRS, it is IFRS 15. So compare those two and find out the difference. Next one, IND AS 1, that is presentation of financial statements. And for comparing that, you have to check IAS 1. Next one, IND AS 7, statement of cash flows. For that, you have to check IAS 3. Next one, IND AS 17, that is with regard to leases. For that you have to check IAS 17. Next one, IND AS 19, employee benefit. Similarly, for that you have to go and check IAS 19. So in almost all the cases, the accounting standard, the title of the accounting standard, the numeric given for that particular standard is almost similar. The only content within those standards, there may be some differences with regard to Indian perspective as well as international perspective. So identify those differences. Next one, IND AS 20, accounting for government grants and disclosure of government assistance. For that you have to check IAS 20. Next one, IND AS 21, the effects of changes in foreign exchange rates. Earlier the foreign exchange rate is with regard to accounting standard 11. Now it is as per IND AS 21. Anyway, find out the difference. Next one, IND AS 33, that is with regard to EPS, means earning per share. We have learned about that. In case of international standards, it will be IAS 31. Next one, IND AS 23, that is with regard to borrowing cost. Find out the difference between the contents within the borrowing cost as per the Indian accounting standard and with international accounting standards. Next one, IND AS 24, that is with regard to related party disclosures. You have to check for IAS 24. Next one, IND AS 27 deals with separate financial statements. For that you have to check IAS 27. So compare the contents within the IND AS 27 and IAS 27. Next one, IND AS 28, that deals with investments in associates and joint ventures. For that you have to refer IAS 28. And finally, IND AS 32, that is with regard to financial instruments and presentation. For that you have to check the considerate international standard with regard to financial instruments. And the last one, IND AS 40, that deals with investment property. For that you have to compare the IND AS 40 with IAS 40. So these are the common standards in which there will be differences with regard to some of the contents or the objectives with regard to IND AS and IFRS. Identify the difference between all these standards, and I believe you have understand all the concept of international accounting standards, Indian accounting standards, and convergence of accounting standards of our country with the international financial reporting standards. Go through these theoretical aspects. If you have any queries, please do let me know.